All right, let's talk real estate. If you think it's just about buying a house, well, you might be taking a much bigger risk than you realize. So today, we're going to dive into how you can build a stronger, much more resilient portfolio by looking way beyond the typical residential market. So, let's kick things off with a really important question for you. Is your investment strategy actually secure? Or are you putting all your eggs in one basket? This is exactly what we call the one-basket risk. And believe me, understanding this is absolutely key to building real, long-term wealth in property. You know, for most people, when you say real estate investing, they immediately think of buying a home. And that's totally normal. But here's the catch. If you put all your money into just one corner of the market, like residential property, your entire fortune is going to rise and fall with that single market. It's a classic gamble, really. So think about it. When the residential market hits a rough patch, and trust me, all markets have their cycles, your whole investment is totally vulnerable. Your returns, your financial security, it's all tied to the fate of just one sector. Okay, but what if there was a better way? A way to build a portfolio that's way more resilient? Well, the solution is to start looking beyond homes and into the world of commercial assets. And this move, it can be an absolute game changer for both your stability and your growth. All right, first up, let's talk about industrial real estate. This is the stuff that literally powers our modern economy. We're talking about those giant warehouses for all the e-commerce packages, the huge logistics centers, and even the data centers that hold our entire digital world. It's truly the backbone of modern commerce. Next, we've got office real estate. Pretty straightforward, right? These are the spaces where business actually happens. Everything from massive corporate headquarters to sleek business parks, and of course, those super popular flexible co-working spaces. When you invest here, you're making a direct bet on urban growth and business activity. Okay, so what's really fascinating here is how these two are powered by completely different things. Industrial real estate, that's all about e-commerce, logistics, and supply chains. But office real estate, that's driven by corporate growth and employment trends. We're talking about two totally different engines driving them forward. So let's zoom in on industrial for a second. And I want you to get that old image of big, dusty warehouses out of your head. This sector has totally transformed into an essential, high-tech asset class, all thanks to some massive shifts in how we all live and shop. The engine behind this is just undeniable. It's the explosive global shift to e-commerce. Seriously, every single time you click Buy Now, you're helping create demand for logistics hubs, distribution centers, and those all-important last-mile delivery depots. It has created the need for industrial space that is just off the charts. So, what does this actually mean for an investor? Well, this is exactly why people are getting so excited. You're looking at consistent income from long-term leases, and often the business tenants handle their own maintenance. Win-win. Plus, with demand so high, the risk of your property sitting empty is way, way lower. It's basically a recipe for steady, low-maintenance cash flow.
Yeah, this quote really just says it all, doesn't it? When you invest in industrial, it's not just about owning a building. You're owning a piece of the actual infrastructure that makes our entire digital economy and modern supply chains work.
All right, let's switch gears and look at the other side of the coin, office real estate. There's been a lot of talk about it, but what we're seeing is not just a recovery, but a real evolution. After a few years of uncertainty, the office is absolutely making a dynamic comeback.
And this comeback, it's really being fueled by two major trends. First, companies are realizing just how valuable that in-person collaboration is. And second, the whole nature of work is changing, which is creating a huge demand for modern, flexible spaces that can actually support a hybrid model.
So for investors, this all translates into some pretty attractive perks. We're talking stable returns from long-term corporate leases, a chance to get in on that urban growth story, and professional tenants who usually keep the property in fantastic shape.
Okay, so we've got these two really powerful but very different types of assets. So the big question is, how do they work together to protect and grow your money? Well, this, my friends, is where the magic of diversification really comes into play.
Honestly, this analogy is the perfect way to think about it. I mean, you wouldn't build a basketball team with only centers, right? Of course not. The exact same logic applies to your investment portfolio. You need different players playing different roles to win the game, no matter what the market is doing.
And this table just lays it out so clearly. Think of your residential property as your growth player. Its main job is to go up in value over time. Then you have industrial. That's your defensive anchor, just churning out steady, reliable cash flow.
And finally, office property is your balanced all-rounder, giving you a nice mix of consistent returns and growth potential. Put them all together, and you've got a much, much stronger team.
All right, I know what you're thinking. This all sounds great in theory, but how do you actually do it? So let's get practical. Let's talk about how you can navigate this new territory with confidence and, just as important, avoid the common pitfalls.
But before you jump in head first, we have to talk about the risks. Let's be real. No investment is ever a sure thing, and being aware of the downsides is the absolute first step to managing them effectively.
So here are the main things to watch out for. Industrial demand, it can be tied pretty closely to the ups and downs of the economy. The office market, it really needs strong employment to thrive. And yeah, commercial properties can just plain have higher costs. But, and this is the important part, these are all manageable risks, especially if you do your homework and have a smart strategy.
So, to help you out, here's a simple 4-step approach to get started. Step 1, figure out your goals. Are you chasing cash flow, or is it all about long-term growth? Step 2, research your locations. Focus on areas with a strong economy. Step 3, use modern tools to get real, verified data. And finally, Step 4, start smart. You don't need to buy a skyscraper. A smaller commercial unit can be the perfect way to get in the game.
And that really brings us to our final thought for today. Look, the real estate market is changing, and it's changing fast. When you look beyond residential, you're not just diversifying, you're actually aligning your investments with the huge economic